everyone, it's Kathy Lee with BK Forex. Happy Monday. So this week, we don't have the tier 1 economic reports like NFPs or retail sales that we typically get on a busy week. But still, that does not mean it's going to be a quiet, lackluster trading week. In fact, we have a lot going on. Front and center is going to be the U.S. debt ceiling talks. President Biden and McCarthy is going to be speaking on Monday, so everyone will be looking for developments and headlines on that front. Take a look at the price action in the equity markets as well as the bond markets. Investors are cautiously optimistic that an agreement will be reached, but there's no strong conviction at this stage. The greenback is kind of mixed. It's lower against most of the major currencies, but recovering at the start of the New York session against the Japanese yen, as well as other majors, and resuming its rally because U.S. yields continue to press higher. Over the weekend, we had comments from Fed Chair Powell that basically set the stage for a pause next month. This is kind of at odds with some of the comments made by his peers last week, which drove the U.S. dollar higher. So the market's pricing in a 1 in 5 chance of a Fed rate hike in June. But I think that those odds are changing week to week as we hear from central bank officials. So for the U.S., the main focus this week will be the Fed minutes, along with the PCE deflator at the end of the week, and the debt ceiling talks, of course. For the euro, that looks like it's finding a little bit of support, and the main report for the eurozone is going to be the PMIs and the IFO. Unfortunately, we've seen a trend of softer eurozone data, but at the same time over the weekend, while we saw less hawkish comments from Powell, we saw more hawkishness from ECB President Lagarde, who basically said they can't be too complacent about rising inflationary pressures. They really need to do something about it. So that kind of set the stage for additional tightening by the ECB and could lend support for the euro throughout the course of this week. But beware of the data, because the data is expected to be a little bit softer. We also have the Reserve Bank of New Zealand's rate decision, and they were expected to raise interest rates by 25 basis points, but it's a coin toss now between 25 and 50 because the budget deficit was much larger than expected, and that's just the spending by the New Zealand government could bolster the economy and push the RBNZ's hand at a bigger move. Regardless, a rate hike is expected, which is why I'm bullish Kiwis this week. For the Australian dollar, that's kind of underperforming, and it's underperforming because China is intensifying the chip war with the U.S., and also data from China hasn't been great, and last week we had a softer Australian jobs report. The Canadian dollar is also trading slightly lower as a result of lower oil prices. It's finding support at 135. Gold is also under pressure as the U.S. dollar kind of retains its bid, but we'll have to see. The U.K. also has a lot of data this week: inflation, PMIs, retail sales, most of which are expected to be softer. But sterling seems to be holding steady today, but I think the risk is to the downside for the currency this week. So a lot going on, despite the fact that we don't have like NFPs or FOMC or retail sales from the U.S. We have a lot to watch that could deliver some pre-holiday action, with many U.S. traders leaving for Memorial Day weekend this weekend. So keep an eye out. I'll keep you updated on everything.